Welcome back, investors, to Ticker Time News. I'm Adam, and today we're doing a technical analysis of Enphase Energy, ticker symbol ENPH. Enphase is coming off of a hot month of June, up over 30% and up 82% year to date. Now, we sit here just about 30 days until earnings, 27 to be exact, and it got me thinking. Was there another point in time in recent history where Enphase had this tremendous run up at such a slope and angle, and also being out about 30 days from earnings? And sure enough, there was. Back here, mid-September until mid-October of 2020, Enphase ran up at the same slope as Enphase just finished in the month of June. And this was also when it reached its peak right here. It was about 30 days until earnings. Now, I know past performance does not guarantee future results. I understand that. But there's a lot of symmetry in charting and chart patterns and techniques. So looking at what something has done on the chart, even for a different company, can show you sometimes what could happen for a company in the future. So let's just take a little closer look at this. We're going to go back to mid-September, mid-October of 2020, and we see that right here, mid-September, we were at the bottom and we were just entering a longer term trading channel that was also ascending. But it started off really quick and it shot up. And could you guess how much this run up was? Give me a percentage in the comments. What do you think this run up was between mid-September to mid-October 2020? 63%. That's what this run up was right here. It was the same exact slope as the run up we just had in June, which was over 30%, but this one went up twice as high. Very interesting that it was able to do that. So once it reached its peak, what did it do for several days? It consolidated. There were red days, there were green days, a few more green days than red days during this time, but something else happened. Volume slowed down dramatically. So that's two things: slowing down in volume and consolidation. Now here, about halfway through, about a week and a half until earnings, we had this big drop off right here. It was a understandable pullback because the stock had just rocketed up 63%. And then it consolidated after that little pullback, people taking their profits, because the stock also ran up against two resistance lines that held the stock back. Also right here, when it reached its peak in this trading channel, it also reached two resistance lines. So we've got three things: the stock running up to two resistance lines, the stock consolidates, and the volume drops off. Three things. So if we fast forward to today, can we find those three things in this chart pattern? First off, we've got the nice slope here and run up. It went up over 30%. It peaked right here, and what happened? Okay, so we have the stock running up against two resistance lines. The short-term trading channel here, and then the longer-term trading channel up here. Now, what do we have currently happening? We've got red days, we've got green days, red days, green days. We are starting to consolidate. Now, what was the third thing? Remember, volume slowed down. If we come down here and look at volume, volume has slowed down dramatically. We are about 30 days away from earnings. So what should we expect for Enphase moving forward? If history can teach us something, and I know history does not repeat, but history does rhyme, I would expect a consolidation pattern to form for Enphase, filling in the gap resistance up here at this line, not going above the 194, 195 line, and maybe even falling a little bit to the 175 as support, maybe filling in this area until we get to earnings. If we have a good earnings and we beat estimates, and right now the street is estimating EPS at 42 cents. So if we can beat that, I could see Enphase taking off and setting a brand new all-time high. Like its all-time high on the 10th of February, where it broke $229. A new all-time high. That's what I could see if we beat on earnings. Consolidate now, kind of follow the path of history from back here, since it's so similar. Fast run up, so close to earnings. So a consolidation, maybe a creeping up a little bit, a creeping down a little bit. Beat earnings, new all-time high. Because we're only about, right now, we're only roughly about 18% away from this all-time high. So it wouldn't take much to get there. Now, of course, if we come in flat or missing on earnings, then the stock could tumble back down to a level of support. And you can see we've got support at $170. But since this was such a quick and fast run up, maybe it could go back down to the 139, 140. I would hope so, because then I could buy a lot more shares. That would be an excellent entry point, by the way. 140, excellent entry point. But anyways, let me know what you think about Enphase in this plan that I see here, consolidating until earnings, and then a beat, we go to a new all-time high. There's another company I want to point out real quick because something similar has been happening to them, and that's Generac Holdings. Ticker symbol GNRC. They hit a new all-time high this week, and they have been, look at this chart. It is clean. It is perfect. They have been in this trading channel since the bottom of March 2020 and have just been up and to the right the whole way. It is amazing. It's beautiful and it's clean. We love to see charts like this. Now, the one thing that I would like to add about Generac, they had a major news announcement today. They've been moving into the energy storage business because they produce a lot of generators. So they have been moving into the storage business with their power cell, kind of like Tesla's Powerwall and Enphase's battery storage solutions. But today, Generac is another great investment for energy storage that is moving in on microinverters with the acquisition of Chilean Power, a designer and provider of grid interactive microinverter and monitoring solutions for the solar market. Adding Chilean's robust microinverter solutions alongside Generac's current Powerwall solar and storage product offerings will create one of the broadest product offerings in the residential clean energy market. And that just happened this week for Generac. That's why they hit a new all-time high. Look at that run up right there. But they are oversold right now. So if you want to get in on Generac, right now may not be the best time, although the trend is your friend. That's a saying. And the trend on this baby, they had an excellent month of June also for Generac. Generac was up over 26% for the month of June. So following right in the footpath of Enphase. but they are beating Enphase by a couple percentage points because they're up 84% year to date. You tack on the additional 3.5% run up today, and they are almost approaching 90% year to date. But I just wanted to point out Generac too, because they are moving in on Enphase's turf or sector in the residential solar business. Enphase, my top pick, hands down. Generac is also one of my top picks as well. They are doing excellent. Both of these companies, if you want to get in on the solar movement, which is going to be one of the biggest transformations in our lifetime, moving away from fossil fuels and into clean energy, Enphase is going to be one of the best stocks to buy and hold for the long term. This is a buy and hold for decade type of stock, okay? All right, so what do you think about Enphase and their opportunities, and also my thesis here on where Enphase is headed? If you found value in this video, the best thing that you can do is click that like button, share this video, and subscribe to join our family of investors. We don't have the big marketing budgets like the mainstream finance media, so your help is greatly appreciated. And as always, if you've watched till the end, you, my friend, are totally awesome. Thank you so very much for watching, and I will see you in the next video.